toxic for homeowners, and I thought that was reason enough to do something. In 2003, I introduced legislation that would have prohibited many of the practices that have led us to where we are. Mr. Watt joined me then. 2 years later, we introduced it again as Miller-Watt-Frank. So yes, many on this side of the aisle have been worried about trying to do something about the toxic loans for a long time. Perhaps not to protect Wall Street. It's pretty remarkable to hear the minority still defending or worrying about the poor, pitiful boys on Wall Street, but to protect consumers, to protect homeowners. We know what caused this crisis. We know what was in the loans in 2004 to 2006. Subprime loans went in 2003 from being 8% of all mortgage loans to 28% in 2006. Many people should never have gotten any loan. They didn't qualify for any loan. But actually, a clear majority of the people who got subprime loans qualified for prime loans. They put their trust in the wrong person, and their trust was betrayed. 90% of those loans had an adjustable rate with a quick adjustment after just 2 or 3 years. They were 228s or 327s. Typically, the teaser rate hovered around prime. It wasn't much of a bargain in the first place. In many cases, was above prime. And then would go up with an average, a typical monthly increase in payment of 30 to 50%. 70% had prepayment penalties locking the borrowers in. 70% were originated by brokers that the borrowers thought were looking after their interests. There was a grotesque asymmetry of information. That's what economists call it. What it means is the lenders were writing all the fine print. Their lawyers wrote all that they gave the borrowers to sign, and then the borrowers were stuck with it. And they were counting on someone who was actually being paid, the broker who was being paid by the lenders to get them the worst loan possible, while they were telling the borrowers they're trying to find for them the best loan possible. Now, throughout that period, we heard the same arguments then that we are still hearing. After all that has happened, we're still hearing from the minority in opposition to this bill that all those loans, that all those terms that may look predatory were actually justified, required to make loans available to people who otherwise would not qualify, to make home ownership available. This is financial innovation. This is the market at its best. We should celebrate it. And we know what really happened during that period. Americans have heard a great deal about the vulgar compensation on Wall Street and in the financial industry. The pay and the bonuses and all the perks, the $1 million plus redecorations of the CEO offices, the corporate jets, and all the rest. And even after all of that, more than 40% of corporate profits in America were in the financial industry. Mr. Speaker, their margins weren't really that tight. They really didn't have to put all those terms in mortgages in order to make them. The terms that appeared predatory in their face really were predatory. They were not about making loans available to people who otherwise couldn't get credit. They were about making as much money as they could, as quickly as they could make it. And we still hear the same arguments, the same parroted arguments from a discredited industry we have heard for years. We have heard letters from the mortgage bankers held up and read aloud as if they were brought down on stone tablets from Mount Sinai. We've heard the concerns of the Wall Street boys. Like everybody in America still believes what they have to say. It is very clear that the members of the minority's view of the role of government is that government should hold the American people while industry goes through their pockets. The mortgages that got us in this mess were shameful. It is shameful that this Congress, that this government ever allowed those mortgages to happen. This bill will begin to put an end to it to make sure it never happens again. It limits the upfront cost that strip equity from mortgages. It prohibits the prepayment penalty that trapped people in bad mortgages so they couldn't get out of them. It forbids the compensation to brokers that creates the conflict of interest that meant that many brokers betrayed the trust of borrowers. It makes...
Gentleman's time has expired. I yield the gentleman an additional 2 minutes.
The gentleman from North Carolina is recognized for 2 minutes.
The arguments on the other side remain the same that they've been. Oh, this will narrow choices for consumers. Like they are really protecting the rights of consumers to pick mortgages like that. Like borrowers came into brokers or mortgage companies and said, can you get me can you get me an adjustable rate loan that goes up after 2 or 3 years and the monthly payment goes up 30 to 50% with a prepayment penalty, so it's harder for me to get out and I have to pay something to get out, with an initial rate that's probably only about prime in the first place, and because I'm paying more at a higher interest rate than I qualify for, how about paying some extra money to the broker? Mr. Speaker, no one asked for these loans. They were duped into taking these loans. Ned Gramlich, a member of the Federal Reserve Board's Board of Governors, said that for all this work, subprime lending actually made sense and helped people get loans, but the practices were indefensible. He asked the rhetorical question, why is it that the most complicated loans, the most sophisticated, the most complex loan terms end up in loans to the most unsophisticated borrowers? He said the question answers itself. They were duped into taking these mortgages. This bill will keep that from happening again. It should never have happened before. This will keep it from happening again. I reserve the balance of my time.
Gentleman from Texas.
Thank you, Mr. Speaker. It's my pleasure now to recognize the gentleman from Texas, Mr. Hensling, who has been a strong advocate of making sure that Americans have plenty of opportunities and plenty of choices when they look